Hello and welcome. You're watching the Daily Report for Tuesday, August 11th, 2009. Stock markets in the United States retreated yesterday following a boom in share prices during the previous week. The Dow, Nasdaq, and S&P were each down about 1/3% in Monday's trading. The opening session this morning was even worse, as markets plunged nearly 0.75% in just a few hours. Despite news that worker productivity in the United States was rising at its fastest pace in 6 years, the markets seemed distracted by possible policy measures being crafted by the Federal Reserve Open Market Committee, or FOMC. The FOMC is expected to keep its key interest rates at or near zero as it continues to pour money into the economy. In other financial news, Elizabeth Warren of the Congressional Oversight Panel is warning lawmakers in Washington today about the threat still presented by toxic assets on bank balance sheets. Despite recent gains on stock markets and slowing of unemployment growth, the economy is still unstable. Total unemployment is not decreasing. It grew last month by 247,000. The national average unemployment did fall from 9.5 to 9.4%, but it fell due to Labor Department revisions of previous statistics, not because of job growth. Warren warns that growing unemployment could couple with some unforeseen circumstance to turn these toxic assets into huge losses for banks and financiers unless something is done to expunge them. Bloomberg is reporting that small banks could require 12 to 14 billion in funding relief to do this. The Tarp program was originally pitched to Congress and the American people as a way of dealing with these troubled assets. It is right in its name, yet it has done very little in that area in the past year and a half. As a result, the number of underwater mortgages in this country has continued to rise. According to Bloomberg, by the second quarter of 2009, the number of mortgages which are more expensive than the value of their property has reached 25%. The U.S. real estate market is a multi-trillion-dollar economy. The financial strain of having 1/4 of that market underwater cannot be stressed enough. Rounding out the financial news, commercial lender CIT Group, despite receiving several billion in private funds and government infusions, is on the verge of bankruptcy. The firm is a leading small business lender, and its collapse could shock the already limping consumer market. In a bit of good news, General Motors announced this morning that its Chevrolet Volt plug-in hybrid could get a fuel economy rating of 230 miles per gallon or more in the city. With the demand for and consumption of oil expected to increase dramatically in the future, having a vehicle with such an extended range will be a huge draw for consumers. National gasoline prices are already 30% higher than they were last year, and oil futures are on the rise. The Volt could be precisely what the domestic auto industry needs to get back on its feet. On behalf of concerned citizens, I'm Craig Harrington. For more related news, tune in tonight for Wake Up America on economyincrisis.org.
What is to become of us? Why are we oblivious, spiraling down and out of control? Better start yelling out, America is selling out. Factories, industries, heart and